Here's a summary of Nu Holdings Q2 2025 earnings call, focusing on key financial metrics, management forecasts, risks, and important statements from the CEO and CFO. Overall performance: Nu Holdings delivered a strong Q2 2025, marked by significant customer growth, revenue expansion, and improving profitability, demonstrating that growth can be achieved efficiently and sustainably. Key financial metrics: revenue reached $3.7 billion, an 85% annualized growth rate since 2021. Gross profit increased 78% year-over-year to $1.5 billion. Gross profit margin improved sequentially to 42.2%. Net income reached $637 million, up 42% year-over-year, with a return on equity of 28%. Efficiency ratio slightly increased to 28.3% due to investments in growth and stock-based compensation, but the long-term trajectory remains a decline. ARPAC, average revenue per active customer, reached $12.20, an 18% year-over-year increase. More mature cohorts are at $27.30. Cost to serve remained stable at 80 cents per active customer, highlighting platform efficiency. Total deposits reached $36.6 billion, up 41% year-over-year. Total loan balances reached $27.3 billion, up 40% year-over-year. Loan originations hit a record $3.6 billion, up 43% year-over-year. Net interest margin (NIM) improved 80 basis points quarter-over-quarter to support strong net interest income growth. Management forecasts and future outlook: continued growth. Management expects sustained customer growth and ARPAC expansion. Margin improvement anticipates further NIM expansion through balance sheet optimization and lower funding costs in Mexico and Colombia. Efficiency ratio decline. The long-term expectation is for the efficiency ratio to further decline, driving margin expansion and profitability. Mexico's strategy: focus remains on growing the customer base, building a local currency liability franchise, and improving credit underwriting for sustainable portfolio growth. Private payroll loans: Nubank is cautiously optimistic about private payroll loans, waiting for collateral quality to be fully tested and solidified before becoming more aggressive, expecting to gain significant market share as a low-cost provider. Significant risk factors: macroeconomic conditions. While currently performing well, management acknowledges ongoing investor concern about the macroeconomic situation in Brazil, Mexico, and Colombia and its potential impact on credit cycles. They underwrite with the assumption that the future will be worse than the past. Credit underwriting: ongoing investment in credit models, and the front-loading of provisions for anticipated credit losses due to model upgrades creates temporary timing mismatches. Regulatory environment: as a regulated financial entity, public policy and regulatory compliance are top priorities. Highlights: customer acquisition reached nearly 123 million customers with over 4.1 million net additions, maintaining an 83% activity rate. International expansion: strong customer growth in Mexico, over 12 million customers, and Colombia, nearly 10% penetration. Product diversification: successful cross-selling across credit, insurance, and investments, with active unsecured loan customers up 56% and secured customers more than doubling. Technological advancement: significant investments in AI and credit modeling, Hyperplane, to enhance decision-making and product development. Management team enhancements: addition of seasoned leaders like Roberto Campos Neto, Eric Young, and Ethan Eisman to drive future growth and complexity. Credit portfolio diversification: secured and unsecured loans now represent over a third of the total portfolio, indicating a more balanced credit offering. Funding strength: robust deposit growth across Latin America, enabling competitive product offerings. Lowlights: temporary efficiency ratio increase. Investments in growth and stock-based compensation caused a slight increase in the efficiency ratio for this quarter. INSS system disruption. A temporary disruption in the INSS system impacted industry origination volumes for public payroll loans, although Nubank gained market share in a contracting environment. Stage 3 NPL formation. An increase in Stage 3 NPL formation was noted, primarily attributed to seasonality, but management remains comfortable with overall asset quality. Most important statements from management. David Velez, CO. Growth isn't coming at the expense of sustainable results. Quite the opposite. We're proving that it's possible to scale efficiently with discipline and still generate strong earnings. We are gearing up to compete on a global scale and are assembling a highly skilled team. These new team members enhance our leading position in Brazil and Latin America, elevate our capabilities, and prepare us for significant international growth in the coming years. Guilherme Lego, CFO. Our operating leverage is one of the most important and competitive advantages of Nubank. It is what allows us to offer better pricing to customers while consistently increasing our earnings power. We continue to underwrite with largely two pillars in our mind. Pillar number 1, we always assume that the future will be worse than the past. So irrespective of where any of us here at the company may think we are in the credit cycle, when it comes to credit underwriting decisions, we always assume that there's going to be a deterioration in the credit cycle over the next 12, 24, and 36 months. From a strategic standpoint, especially in markets where information asymmetry is lowering very fast, including in Brazil with open finance, we do believe we need to be the best place for our customers across Latin America to receive payments, make payments, and store value. In essence, Nu Holdings presented a robust Q2 2025, driven by customer acquisition, product expansion, and a commitment to disciplined, efficient growth. The company is strategically investing in its technology and leadership to solidify its market position and prepare for future international expansion, while actively managing risks and maintaining a strong focus on long-term value creation.